Hello everyone. In this issue, we would like to consider the future of Japan's automobile taxation system, building on the previous two issues. First, we would like to consider the challenges from a tax revenue perspective. Automobile-related tax revenues are not a small amount. In FY 2021, tax revenues from the gasoline tax and local gasoline tax, which are imposed on gasoline consumption, are approximately 2.3 trillion yen. In addition, tax revenue from the diesel fuel withdrawal tax, which is imposed on the consumption of diesel fuel, is approximately 0.9 trillion yen. Thus, the more vehicles become zero emission, the more these tax revenues will decrease. Since consumption tax revenues are approximately 28 trillion yen, a simple calculation corresponds to a revenue decrease of a little over 1% in the consumption tax rate. Incidentally, since a consumption tax is imposed on the price of gasoline, including gasoline tax and local gasoline tax, this also results in a decrease in revenue. Although the automobile tax by vehicle type is treated as a property tax, there are cases where automobiles are considered a necessity, especially in areas where public transportation is inconvenient. In addition, from the perspective of external costs discussed in the last issue, since there are no external costs associated with owning a car, it is desirable from an environmental standpoint to have zero taxes. However, as we have seen previously, the tax accounts for about 7.6% of prefectural tax revenues, about 1.5 trillion yen. So the challenge is to secure alternative sources of revenue in order to lower the tax amount. Next, we would like to consider the issue from the perspective of external costs. It is known that, in economic theory, it is desirable to tax the car only by an amount equal to the external cost of the additional increase in car use. This is called the marginal external cost. This is called the Pigouvian tax. Pigo is the name of the economist, A.C. Pigo, who first discovered this. Based on the following table, which we also presented previously, the external costs associated with gasoline consumption, one related to global warming and the other to air pollution, total approximately 27 yen and 80 sen per liter. The current gasoline tax was 53 yen and 80 sen per liter, which is a relatively high rate from the Pigouvian tax perspective. External costs related to congestion and traffic accidents are not currently paid for by their generators. This is referred to as external costs not being internalized. If we assume that external costs increase in proportion to the distance traveled, then a tax of 9 yen and 50 sen per kilometer traveled would be required. However, the external cost estimation example in the table assumes an average value for all of Japan, so the mileage tax would be 2 yen and 50 sen per kilometer in areas with no congestion, and more than 9 yen and 50 sen per kilometer would be required in more severe areas. Thus, for the congestion portion, taxation based on the degree of congestion would be more desirable. London is famous for having dramatically improved its congestion problem with the introduction of the congestion tax. Assuming that instead of taxation based on mileage, external costs related to congestion and traffic accidents are converted to average fuel consumption. Here we use 15 kilometers per liter in the previous example, and substituted by fuel taxation, a tax of 142.5 equals 9.5 times 15 yen per liter would be required, which together with the portion corresponding to external costs incurred by gasoline consumption above, 27 yen and 80 sen per liter, would amount to about 170 yen and 30 sen per liter. It is not realistic to set this tax amount, but it shows how great the loss due to congestion is. We have already mentioned that the automobile weight tax has the nature of a road damage burden, but the problem is that the tax amount is the same for both people who use their cars a lot and those who use their cars infrequently. From this perspective, it would be desirable to introduce taxation based on mileage, while still using gross vehicle weight as the standard. Here is a summary of the discussion so far. First, fuel taxation needs to address external costs related to fuel consumption, such as global warming and air pollution, and the current gasoline tax is considered relatively high. As for electric vehicles, regardless of their widespread use, taxation should be levied on the external costs in the electricity generation sector. Second, with respect to congestion, taxation should be based on the degree of congestion. The effect is expected to be significant even with coarse tax rate settings, as in London case. Of course, the cost of system implementation must be considered separately. Third, external costs of traffic accidents and road damage contributions should be taxed based on gross vehicle weight and mileage. Fourth, taxation on the acquisition and ownership of automobiles should be zero from the perspective of external costs. Fifth, external costs during the manufacturing and disposal stages of vehicles must be treated with separately. The discussion here is primarily from an efficiency perspective. Equity should not be considered on an individual goods and services basis, such as cars, but rather on an overall basis. Since drivers include both high-income and low-income individuals, reducing the burden on drivers would mean giving tax breaks or subsidies to those with higher incomes. In this issue, we consider the future of Japan's automobile tax system. Thanks for watching.